All right, in the last video, we built the chart of accounts. We now have a structured list of accounts and a system we can choose from. But now comes the big question. How do we actually record transactions correctly? Because every time something happens financially, something changes. So here's the fundamental rule of accounting. Every transaction affects at least two accounts. This is called double entry bookkeeping. Why? Because of what we learned earlier. Assets equal liabilities plus equity. Everything must always stay balanced. So if one thing changes, something else must change too. If assets go up, then either another asset has to go down, or a liability has to go up, or equity has to go up. To track these changes, we use two terms, debit and credit. These do not mean debit is bad or debit is good and credit is bad. Instead, they are just directions. Think of them as left side debit, right side credit. Now let's connect this to the accounts we built. For assets, they increase by debits and they decrease by credits. For liabilities, these increase through credits and decrease by debits. For equity, these increase by credit and decrease by debits, so the same as liabilities. Revenue increases via a credit and again decreases via debit, and expenses increase via a debit. So don't try to memorize this. Instead, think about what's happening. So example number one, you earn income. What happens when you earn income? Well, cash goes up. What's cash? It's an asset and it increases. Therefore, we debit cash. At the same time, income increases. Okay, we have income that increases. That's where we got the cash from, but income increases. That means that our revenue, our income account category increases, and we increase revenue with a credit. So for example, two, you pay rent. What happens to cash? It goes down. The asset decreases, and we represent that by crediting cash. The second side of that is that we have an expense, rent expense, and that expense increases. And how do we represent increases in expenses? Through debits. So remember, every transaction has two sides. It keeps the system in balance. And through practice of all of these different types of transactions, you will get familiar with which kind of transactions cause debits or credits, but it's really important to keep these debit on the left-hand side, credit on the right-hand side, rules in your mind, along with what causes assets to rise and decrease, liabilities to rise and decrease, equity to rise and decrease, and same thing with revenue and expenses. So now let's connect everything. Our chart of accounts gives us the accounts, but it doesn't really tell us anything about what to do with those accounts. Double entry, it gives us the rules. Okay, so these are the rules that we have to follow. Together, they allow us to track changes in net worth accurately. And this ties directly back to net worth being a change in our position, okay? Or rather to be the position at a point in time, the difference between assets and liabilities, and our income statement, which represents the change in our net worth. So now we have the accounts, we have the rules, but we still need one thing. How do we actually record transactions step by step? And that's what we're doing next in journal entries, every transaction has two sides. Now we're going to start recording them in our next video. If you've liked this, make sure you hit that like button and subscribe to the account to stay updated on new video and new content for your benefit.